Heike Reichelt is the head of investor relations and sustainable finance at the World Bank Treasury. Thank you so much for joining us today, Heike.
Thanks for having me.
So could you explain to our audience a little bit more about your role at the World Bank?
Sure. So as you mentioned, my title is Head of Investor Relations and Sustainable Finance. So I lead a team, and our role is to engage with investors who buy our bonds. We explain to them, what the World Bank does, our credit, our funding, and really we've been spending a lot of time recently talking to investors about how the World Bank uses bond proceeds for its projects and programs around the world. And we're actually responsible for several issuers. The largest is World Bank, officially called IBRD, or International Bank for Reconstruction and Development. But also recently, we became responsible for the funding program of IDA, International Development Association, which is an organization that has been around for 60 years, but only recently accessed the capital markets.
And you mentioned that the World Bank Treasury is responsible for funding programs with several issuers. Investors in the audience are more familiar with the IBRD, known as the World Bank, but the IDA is relatively new. So can you tell us a bit about the two issuers and their funding programs? What's the size and product mix for both issuers, and how will this evolve?
Okay, sure. So both issuers work towards the goals of the World Bank Group, which is to eradicate extreme poverty and boost shared prosperity. They do this in different ways and have different clients. So the World Bank, or IBRD, provides financing for middle-income countries, and the projects are health projects, education, sustainable infrastructure, and we raise funds in the capital markets, have been doing that for over 70 years. And the funding program is about, an average $50 to $60 billion a year. And the products range from very small, customized transactions to very large benchmarks. The largest is around US dollars 8 billion. And the World Bank offers funding in many different currencies, like 20-something different currencies. And IDA, International Development Association, the organization that's been around 60 years, but is relatively new for the capital markets, gets funding every 3 years from its shareholders in a process that's called replenishment, so that IDA can provide grants to the lower income countries. And a few years ago in 2018, IDA, for the very first time, accessed the capital market. So IDA leveraged its capital so that it could scale up to help meet the Sustainable Development Goals. So IDA is a relatively young issuer with a funding program last year of $10 billion equivalent, but that is growing.
Has IDA issued in CAD?
In Canadian dollars, not yet. So the currencies that IDA has raised funds in are US dollars, euros, sterling, and also Swedish kroner. IDA has not yet issued in Canadian dollars, but is looking at Canadian dollars as well as other currencies like Australian dollars, New Zealand dollars, and some Scandinavian currencies. So hopefully that will come.
And shifting over to ESGs, the World Bank has been at the forefront of the shift towards ESG-focused investing in the capital markets. What do you see along those lines going forward?
Yes, that's correct. So almost 15 years ago now, the World Bank issued the very first labeled green bond. And we've really seen a shift in the capital market since then. So it catalyzed a change in behavior of issuers and also investors. Before that time, the conversations that we had investors really just revolved around the financial aspects, the terms, the interest rate, credit, of course. But now conversations go beyond that, and investors are really trying to understand how the World Bank, or IBRD, and IDA are using the proceeds for different projects. And I think this is evolving. Investors are asking more questions. They want to understand the environmental, social, and governance credentials of an issuer. With labels, they know what's behind the labels. They have transparency for that, but they're really looking for a much broader range of information. So I think where this will evolve is, more transparency more data. So a lot of focus on impact reporting and helping investors compare the bonds that they're buying and how they're helping towards positive impact.
And what themes have you seen the most interest in from investors?
I would say that climate is at the forefront of everybody's minds, including ours. Over the past 18 months, social themes increased also the interest because of the pandemic, interest in how we were supporting health, education, how children were affected by the pandemic in terms of their learning, for example. We issued several bonds with a gender theme, so we were engaging with investors around gender and the effect the pandemic had on women, for example. But I do think that climate is the challenge of our generation, and what we are spending a lot of time on is talking to investors about our entire balance sheet. So the World Bank issues, I mentioned that we issued the first green bond and we're continuing to issue green bonds, but we've also expanded this dialogue with investors to a more holistic approach and talking to them about our entire balance sheet. And we have used the label Sustainable Development Bonds for that. And we are currently engaging with investors to explain to them how climate is mainstreamed and integrated in everything that the World Bank finances. So I would say that the shift is going towards this holistic approach and talking to investors about different themes.
In your impact report this year merged impact reporting for green bonds together with impact reporting for sustainable development bonds. Can you explain why you made that decision?
So it's a little bit of what I was talking about. It's this holistic approach. We have green bonds and investors are interested in our mitigation activities, how we're working with countries on adaptation and resilience projects. But they're also interested in the entirety of what we do. So we published one report and we still have a section on green bonds. We have a project by project reporting and showing how we're allocating the funds through our reporting to specific projects. And we report on metrics like greenhouse gas emission reductions. But we're also including reporting on our entire portfolio, and it's slightly different. We use the Sustainable Development Goals as a framework to explain how our activities support the entirety, all 17 Sustainable Development Goals. But the reporting is a little bit different. With green bonds, it's a smaller portfolio. It's much more limited. There's 100 projects. With the Sustainable Development Goals, we have a portfolio of over 600 projects. So the reporting, we're trying to summarize it in a way that makes sense. But it's all going towards this more holistic approach.
And what other key initiatives do you see developing in the market for ESG products?
I think investors are asking more questions about the issuer. So labels are a starting point. They're interested in what's behind the label. They're interested in the approach. They expect that issuers follow the very standardized process that's published in the Green Bond Principles or the Sustainability Guidelines by ICMA, the International Capital Market Association, but they want to learn about the issuers overall, the strategy, also where the issuer is going. So they're not just taking a point-in-time approach, they're looking at how the issuer strategy is evolving. So I think where we're going with this is that investors are taking on a more holistic approach, and they're using different resources, different sources of information, including ESG scores, including impact reports, and data providers I think platforms that provide data like Bloomberg will play an important role in helping investors compare different products.
So let's get back to the funding program. There's a big shift going on. LIBOR will be going away and the markets are putting plans in place to transition to new reference rates. For the US dollar, how is the conversion to SFR impacting your funding operations?
Yeah, there's a lot of acronyms there. So yes, LIBOR is going away in the capital markets. And for US dollars, the new reference rate is SOFR, the secured overnight financing rate. And our funding is, we're helping to build that market through our funding. We issued the first SOFR bond by a supranational entity, and that was in 2018. It was small, a $500 million transaction, and it was a short duration, 2 years. And that market has really grown. We then issued longer maturities, 2 years, 5 years, 7 years, and recently also a 10-year. So that market's really expanded. And other reference rates are also, building more markets. So for example, for sterling, there's Sonia. So I think that the conversion or the transition to these new reference rates is going well.
And what product innovation might we see as a result of the SOFR transition?
I think we'll see innovations more on the hedging side. So the funding, the bonds seem to be quite well established. I think we will see innovations on the hedging side.
And have you seen a shift in the core investors with the transition to SOFR?
Yes. Initially, the investors were almost exclusively banks, US banks, but that has shifted. There's asset managers, pension funds, corporates, so a broader, more diverse investor group. And for us, we've also seen some new investors who weren't purchasing World Bank bonds. They became interested in our SOFR products, and so we had them as investors and could diversify our investor base.
And has the interest rate environment shifted your duration targets, or is that driven by the asset side of the book?
So we actually hedge with floating rate. So we're not so much driven by the interest rate environment. What I will say though is, well, first of all, we have lengthened our duration, and it does help because on the asset side, our duration is longer. Our average duration this past fiscal year was around 8 years. And the reason we're doing that is to smooth out our refinancing. So to smooth out our refinancing. And for the investors, because of the interest rate environment, because of low interest rates, they have been moving out the curve. So indirectly, the interest rate environment has affected our funding because it's easier for us to raise longer term funding. And we do that in currencies such as euros. That's a really good market for that.
And what's the next thing in terms of investor engagement for you?
So I mentioned that we have launched this initiative to engage with investors around mainstreaming climate. So we're communicating with investors, we're explaining the World Bank's climate change action plan to them. We're talking about this approach of how we're working with countries on the whole of the economy approach. So there are 5 sectors that are responsible for over 90% of greenhouse gas emissions. So if we can work with countries and help them transform those sectors, it would make a huge difference. So we're taking this holistic approach in our work with countries. And in our engagement with investors, we're trying to explain this to them, and then also explain how, our entire portfolio, every single project goes through, has a climate angle, because we assess every project for climate risks. And then if you look at the number of projects for IBRD, over 95% of our projects have climate co-benefits, as it's called. So they have some sort of climate financing in them. And then if you aggregate that climate financing up in the entire portfolio, it's more than a third for IBRD. So this is what we're trying to talk to investors about. And then we're going to be issuing sustainable development bonds on the back of that. And we're targeting $10 billion in sustainable development bonds while we're engaging with investors on our new climate change action plan. So that's something that's new for us, and we're really excited about it.
So we're going to be running out of time soon, but was there anything else that you wanted to mention that you think would be really important for our audience to hear?
I think maybe 3 things. One is that we have to remember and take a global holistic approach. Another one is really focus on transparency and data and providing information. And there's a lot of developments around technology and AI, but we shouldn't forget the human touch, the human interpretation of data. And then finally, I would say that, we have to have the end goal in mind, which is that we want all activities to be sustainable, and, think about financing everything that really helps people and the planet.